Joining us now is the Wall Street Journal's chief economics correspondent, John Hilsenrath. John, good to see you. Thanks for being
Maria,
here.
Great to be here.
What were the big takeaways from the Fed yesterday? They lowered their expectations for economic growth, right?
Yeah. Well, a little bit. I mean, the big takeaway was that they lowered their expectations for where interest rates are going. And, you know, what I took from this is another sign of how Janet Yellen runs the place and how we can expect to see her behave in the future. She is a very cautious individual. When there are moments of uncertainty, when it looks like there's anything coming up on the horizon that could derail this expansion, she's holding back. The Fed has a plan to raise interest rates, but she's not taking any chances on that.
So does that change how you're allocating capital, Michael Block? I mean, in what you heard from the Fed yesterday?
Look, I've been very cautious here. You know, everything that they did yesterday is what I saw. The one thing that surprised me was the Fed's been talking up inflation, and a lot of the street was talking that up. I wasn't seeing it, and sure enough, that summary of economic projections had inflation going down. I was surprised and pleasantly, in my case, to see that they actually acknowledged that. John, were you surprised about that?
Well, you know what I felt. I mean, we expected their inflation estimate to go down because oil prices were so low. But what I found to be very interesting was Janet Yellen's take on this in the press conference. So she said she's very, very suspicious of these numbers that have been coming out, which show that inflation picked up in the first couple of months of the year. You know, there's this idea in economic circles called residual seasonality. Basically, what it means is that the numbers, the inflation numbers, tend to be a little bit stronger early in the year than they are later in the year. And so she thinks there's flaky things going on with the numbers, and we're not seeing a pickup in inflation yet. And that's another reason why she's being very cautious.
I don't know. My takeaway is the fact that this economy is bumping along the bottom. You said it yesterday, Dagan, that you're expecting retail sales to continue to be under a rock.
Yeah, and John, I don't, is that really a valid way to explain away the bump up in inflation? She's essentially saying, I don't trust the numbers.
Yeah.
Again, it goes to every time we get an unemployment rate, we get the black helicopter crowd who says that you can't trust these numbers. She's basically feeding into that in a way.
You have that's a very valid point. You have the Fed chairwoman saying she's got some doubts about the numbers too.
Yeah.
What she's saying is that there's a seasonal element to it that you can't factor into it. But, you know, it kind of shows how adrift we are right now in reading how this economy is doing. And again, her response to any kind of uncertainty is to slow things down. Slow things down on the interest rate front.
Yeah, Steve, what do you think?
Maria, I think the Fed told us yesterday what the market has largely told us this year, which is confusion, right? Which is that, and I think you're exactly right. Are we growing? Yes, but we're growing way below our capacity to
bumping
grow.
along the bottom.
You're right. We're barely growing. By the way, for the first time, looking at a bigger picture, for the first time in American history, we've now had a full decade, 10 years of sub 3% growth. That has never happened in the United States before.
That is a big deal.
Right now. That is a very, very big deal. So I think the Fed is acknowledging that and doing the best it can without sounding alarmist to say we have to be careful here about normalizing rates because things aren't great out there.
The other thing that the Fed did yesterday was basically validate the market's own concerns about how this economy is doing and about what kind of Fed policy is appropriate for this. The market never believed it last year when the Fed said they would raise interest rates 4 times in 2016. We're finally getting the Fed validating that and saying, yeah, it looks like only 2, and who knows if we'll even get 2.
No, and to that point, John, it's sort of like, you know, I've got 4 kids at home, and I always try to not bluster. Sometimes as a parent, you say, you know, you are grounded forever, right? That's what the Fed essentially said. We are going to raise rates 4 times. You watch us. Now they're saying, okay, maybe 2. I think.
By the way,
when are they
now
raise?
they're saying 4 times in 2017, and who knows if that's going to come out.
Would they raise in September right before a presidential election, or does it not matter? I mean, if they don't raise right before the presidential election, then what do you have? You have June.
I think it absolutely matters. I think it matters.
Well,
because
hey, Maria, let's not forget in June there's a Brexit vote, and they're going to be worried about market volatility and uncertainty then.
Yeah.
Oh, my
If they don't
God.
raise in June, I think the window closes quickly because of politics.
That's what
The
I'm
Fed
saying.
always tries to claim.
If they don't raise in June, the window's
They
closed.
always try to claim that they're not political. They are hyper-political. Okay, last time I checked,
you know,
the Federal
one
Reserve
thing
is headquartered in Washington, D.C.
No.
John pointed out the Fed will move. The Fed has done a lot before presidential elections. 2008, the Lehman Brothers.
No, but that's they had no choice. They hiked in 1999.
In 2004, they started their rate cycle a few months before the election, and they kept going right through the election. And in 2012, they announced one of their QE programs right before an election. In 2008, they let Lehman Brothers fail before an election.
They're always willing to do it. But hold on, a history lesson. 1992, which I know is a very long time ago now, they were largely blamed for George Bush the first losing re-election because they hiked right into the election. I don't believe they're willing to repeat that.
And what about on a meeting day?
I think Brexit is a bigger problem for them than the election, because if they're worried about European markets,
the possibility that Britain leaves the EU, Brexit, they're calling it. Let me ask you this: what about on a meeting when they don't have a press conference, like April?
Well, you know, J.P. Morgan has a note out saying they're saying maybe they'll go in July, because it'll be after this vote on the UK and the EU, and maybe they signal that a move could be coming in June, and then they do it in July. That's J.P. Morgan's forecast right now.
John,
but let's not forget, they say 2 rate increases. A lot of people in the market are saying just 1, so maybe we don't get anything until December.
The window's closing.
Yesterday, the Fed Fund futures had a 42% chance on just 1 hike this year, 22%. This is in the article in the Journal, 22% on 2 hikes. But if you, from the view from above, if I listen to you and read your work and listen to Janet Yellen yesterday, this is a rudderless, weak Federal Reserve that the market and investors have been getting their policy right, and they've been off base, John.
They've blown it.
Isn't that unnerving?
They've blown it.
Well, you know, their forecasts have been off for most of this expansion. Their forecasts on how fast the economy would grow. Their forecasts, ironically, on how much unemployment would come down. It's come down more than they expected. So, you know, their models, their economic models don't work terribly well, and they're navigating basically with a finger in the wind.
You know, the numbers have come down. You know, wages aren't going up. Inflation's not going up. The other thing that I have to get out here is data dependence. You know, J.P. Morgan talking about July. That's because they're tunnel visions. They're saying this is all about the data. It's not about the data.
No.
You know, what these guys are doing is they're watching what's going on in the markets. They see this volatility. They see this crazy movement. They see that, and that's going to keep them on hold here too. That and politics.
All right, we will leave it there. John will be watching. Thanks so much.